From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Nvidia vies to become the most valuable company again. Shares rally on strong earnings that withstand lost Chinese revenue.
Plus, Apple also back up over $3 trillion. This is the company plans a sweeping change to its operating system names.
And we speak with the CEO of Informatica about its $8 billion deal with Salesforce. But first, we check in on these markets. And Ed, we make up for yesterday's losses. We're currently higher to the tune of, well, let's call it 0.7%. We're moving around as the GDP figures come in lower than expected, but we're seeing resilience in earnings and also, well, a mood change when potentially it comes to tariffs. We're going to dig into the fact that a US court says you went above and beyond the administration. But Ed, what are you looking at?
At this time, once again, Nvidia is the world's most valuable company. Stock up, it's buoyant. Strong outlook for sales, despite clear headwinds and actually big questions about the future of that company in China. Later, we will hear from the CEO, Jensen Huang. We spoke to him last night. The stock's trading at its highest level since around January. And actually, across the AI infrastructure space, inevitably, it's dragging a lot of its peers, partners, suppliers with it as well, Kara.
It does, but all of them have to withstand geopolitical risk. Let's just talk about it, Ed. The US Court of International Trade has actually ruled that President Trump has exceeded his authority in imposing sweeping tariffs, ruling them illegal. Senior White House officials today downplaying the court ruling, expressing some confidence about an appeal. Let's get to it all with Kayleigh Lyons, who is here with us in New York. And Kayleigh, set the scene. How much does this upend the tariff policy?
Well, not the tariff policy in its entirety, but certain parts of it. The ones that the president used the International Economic Emergency Powers Act from back in the 70s, IEEPA, to impose. So that would include this 10% base rate of reciprocal tariffs that are still in place, or were still in place on all countries, as well as the ones that have been imposed on Canada, Mexico, China for the trade of fentanyl. The judges essentially ruling unanimously that that was not an economic emergency that justified the use of these powers. That is not to say that there aren't other authorities the president does have the right to use, ones that have been in place, like Section 232 tariffs, for example, which apply to steel and aluminum or automobiles, kind of sectoral specific. There are other authorities he could pursue as well when it comes to Section 301, for example, unfair trade practices, though that would require an investigation. Basically, and we've heard this from administration officials today, they can go down other avenues. It just doesn't necessarily mean that they'll be able to act with as much ease and speed as they would otherwise when he was suggesting that he will impose these blanket levies. He has already appealed this. The Justice Department is looking at this. It could potentially go all the way to the Supreme Court. But for now, these tariffs, at least the broad-based ones, cannot stand.
Kayleigh, last night there were a series of events. There is a chronology that's really important to understand. The first thing that happened was Nvidia's CEO, Jensen Huang, saying this about Trump's tariff policy.
The idea of tariffs being a pillar of a bold vision to reindustrialize, to onshore manufacturing and motivate the world to invest in the United States is just an incredible vision. I think this is going to be a transformative idea for the next century for us. We're all in on the idea.
10 minutes after that statement, there was a red headline on the Bloomberg terminal about the US Court of International Trade's decision. I am only pointing out that is an astonishing timeline of events.
Well, it certainly is. And as we heard Jensen Huang in your conversation with him talking about one of the things these tariffs were intended to do, which is bring more onshoring to the U.S., revitalize American manufacturing. That isn't the only part to consider here, Ed, as they also were intending for this to be a revenue raiser. We had already seen billions of dollars coming into the Treasury's coffers as a result of these tariffs. They argue that it could raise hundreds of billions of dollars a year, help to offset some of his other priorities, including tax cuts in the package that is currently working its way through Congress. So that obviously upends that effort fiscally. There also is the kind of wider narrative about the U.S. trying to make sure that China's overcapacity specifically is addressed. This is why China is a factor not just in direct talks between the U.S. And China when it comes to trade practices and things around export controls, but why China has factored into conversations the U.S. has had with other trading partners in trying to negotiate these deals, because they want to make sure that China isn't just flooding the market with cheap goods and therefore, in the eyes of the administration, manipulating it and disadvantaging other U.S. companies, and they may have to find other avenues to pursue that now.
Bloomberg's Katie Lyons, thank you very much. Let's get back to the conversation with Nvidia CEO Jensen Huang following the company's earnings. The main focus, the future of his company in and competition with China.
The Chinese competitors have evolved and advanced greatly over the last year. Like everybody else, they're doubling, quadrupling their capabilities every year, and the volume is increasing substantially. And remember, these are data center chips; they don't have to be small; they could be quite large. Without American technology, the availability of Chinese technology will fail the market. And so, whatever we offer has to at least be competitive, and it has to add value to the market.
Jensen, does Huawei have an AI accelerator or a GPU that is performant as H20 or is performant of other classes of GPU that you make?
Huawei's technology, based on our best understanding at the moment, and we have a lot of ground truth there, is probably comparable to an H200. And so they've been moving quite fast, and they've also offered this new system called Cloud Matrix that scales up to even a larger system than our latest generation Grace Blackwell. And so Huawei, as you know, is a formidable technology company, and they're not sitting still, and they look for ways to compete, and they're quite formidable.
With that in mind, you've kind of explained the landscape now, NVIDIA's ability to operate in China. I mean, you and I this year alone have already discussed the idea that there are 50% of the world's AI researchers in or from China. But are you having a sense of the vacuum created that those big names, I think about Tencent or Alibaba or Baidu, that were buyers of H20, that they've already pivoted and turned to the offering from Huawei because of the policy that is in place?
Yeah, they have no choice but to, one of the challenges of the changing regulations is the ability for markets to trust the Nvidia and ultimately American platforms. And so it's prudent, I think, for the Chinese customers to make sure that they develop their stack on Huawei, and because it's hard to rely on American technology at this point. And so that's one of the unfortunate parts of changing policies. But anyhow, I have every confidence that if able to compete, American companies will compete. This is to write off American technology companies is not smart. This is the home of some of the brightest computer scientists in the world. American companies are incredibly competitive. We just have to have the confidence to go compete. And if we have the confidence to compete, we will win.
Jensen Huang there in an extraordinary conversation with Ed Ludlow just yesterday. And let's talk more about NVIDIA's earnings, about the China headwind, whether they can surpass it. Joanne Feeney's with us, partner and portfolio manager at Advisors Capital Management. For you, did the numbers give some relief that they can drive forward, that revenue will continue to explode even with non-access to China?
Yeah, Caroline, it's pretty clear that China didn't prove to be much of a headwind at all. I know folks came out there and they cut their numbers in advance because of the announcement of that restriction on H20. But when you look at what they delivered, it's pretty clear to me that NVIDIA is still, and its customers are still in a situation of not being able to produce enough of those Blackwell and Grace Blackwell chips to satisfy demand. So, you have to listen carefully to what Jensen said. He said that they would have had $2.5 billion more in sales to China He didn't say that they would have had 2.5 billion more in sales in total. So I think what happened there was simply that they had plenty of people on the wait list to get those chips. And when they couldn't sell them, they lost obviously the H20, but, they were able to pull out of their hats the Blackwell and ramp that up more quickly and satisfy a long waiting list of demand.
So going forward, does it change any of your portfolio allocation to Nvidia if this restriction remains? And indeed, if Jensen doesn't decide to look for a new kind of design that does meet Washington's abilities for him to sell into China once more?
I don't think, given Washington's current stance, that there's going to be anything that they can do about this. He said he was working on something, but when you look at the competitive alternative, which is Huawei, why would Alibaba or Tencent buy an even lesser chip than the H20? The only reason they would is if Huawei is capacity constrained. And there was a hint of that, even though they said capacity rose a bit. These are bigger chips. That's how they're getting to the higher performance. They're simply making them bigger, putting more space on the chips between transistors. So I suspect there's a capacity constraint. So if they did find a way, perhaps these customers would buy even a lesser chip from Nvidia. But beyond that, just look at the global demand still. I think we're still years away from Nvidia running out of customers, even without China.
Nvidia is up almost 5% right now as we speak. I'm looking at the landscape of what else is up today. I think it just comes down to, Joanne, you tell me, do you believe in the big picture that Jensen, every single earnings call and every interview presents, which is the investment curve for the AI infrastructure around the world is exponential? He uses words like exponential and insatiable demand.
Well, Jensen's very good at drawing exciting pictures. I think we'll have to see just how much uptake there is, but the early signs are very positive. The applications for AI are clearly spreading to multiple sectors, whether it's healthcare, industrial, financials. And now we are seeing what he talked about a long time ago, which is the demand by other sovereigns. So he seems to have on his plate a very big opportunity in Europe. We'll obviously learn more about that after his trip next week, hopefully. But also enterprise. And right now, enterprise on-premises computing is still the vast majority of compute out there for data centers, for data type of work. And so there's an opportunity there for on-site AI. I think that's going to be a very large market in addition to the sector spread. So yeah, I think there's a big opportunity ahead. Obviously, how big it is, we're going to have to see. But it gives us certainly good reason to continue holding Nvidia for clients, which we have done since early 2022.
In a Grace Blackwell server design, Dell has touched it, Micron has touched it. There are other components in there, and it's interesting to see those names also higher. I really wanted to ask you this. This is the CEO of probably America's most important technology company telling Chinese technology companies not to bother with American technology and to buy Huawei. How do you model for and assess the stock based on the CEO's relationship with China and the President of the United States and the fine line that he's clearly walking?
Very tricky politics, obviously, for every CEO. I think he made a really important point, and it's one we've seen before, that is there's a standards battle going on here. On which type of technology platform or stack, as he put it, will AI applications be built? And he's right to point out that it's better if we, the US and Nvidia and our other companies like Broadcom, win that standards battle. It will expand our markets, not just in China, but beyond China. He's going out there to try to win the business from Europe. So, it's hard to put numbers on these things, Ed. But yeah, again, I think for the foreseeable future, we do have a situation where the waiting list for these chips is so large that missing out on China itself is probably not that big of a deal. Now, some years from now, we might very well feel, and Nvidia might feel, that loss of that market if something doesn't change.
Joanne Feeney from Advisors Capital Management, thank you. Now, coming up on Bloomberg Technology, Salesforce makes another big AI push, purchasing Informatica for $8 billion. We speak with Informatica's CEO, Amit Walia. That's next. This is Bloomberg Technology. We have breaking news crossing the Bloomberg terminal. A federal judge is weighing Harvard University's lawsuit, which challenges the Trump administration and its ban on enrolling international students. That judge is saying that she will expand the temporary block that had been put in place on the enforcement of that Trump administration ban. If you remember, there had been an argument from Harvard University that the Trump administration's ban on enrolling international students caused harm and spread fear, which was the justification that the judge had to originally do the temporary block. Now the news crossing the Bloomberg is that same judge is expanding the block. We'll bring you more details as we get them. Let's take a look at shares of Salesforce. The company raised its annual sales forecast, citing strong revenue contributions from its AI Agentforce product. Salesforce expects revenue between $41 and $41.3 billion in the year ending in January 2026, compared to an earlier forecast of $40.5 to $40.9 billion. Kara.
It was notable because we stay with Salesforce, and of course the software giant Ed also announced earlier this week that it will be acquiring Informatica for about $8 billion in an effort to help its customers roll out AI tools sooner. Let's welcome to the show now the CEO of Informatica, Amit Walia. And it's so interesting that, of course, you're talking about continuing your innovation, your product enrollment with Salesforce. And I just want to ask about this unified architecture when it comes to agentic AI. What are you going to be able to do as a combined force?
Well, Caroline, thanks for having me. It's a pleasure to be here. I mean, it's a great opportunity and a great moment for not just Informatica, but for our joint customers and partners across the globe. Look, you've heard, AI is all about getting the right data, high quality data with good governance for it to be trusted and to be able to deliver results that the agentic revolution wants. And look, Mark's been a visionary in that world, and I think together we can truly bring that at scale for our joint customers. And the platform and the scale they have with the best-in-class data management platform we have, I think it's a best combination for the industry to truly let enterprises scale out their Gen AI and agentic workloads.
You've been with Informatica for more than a decade in various roles, and you're CEO now. How does it feel to be, well, passing the company on to new ownership when, for example, last year you were talking about doing the same thing, but that unwound on a price point that seemed to be higher at that point?
Well, look, I'm thrilled. I think, look, the opportunity here is when we looked at it, is to truly take this company and scale its innovation and scale its reach for our customers. And who better than Salesforce? I mean, look at the scale they have, the innovation engine they have, the customer centricity they have. So when we stepped back and looked at it, I couldn't be more thrilled. And look, Mark's been a visionary. He's created many revolutions in the enterprise tech industry. And I think it couldn't be a better place for Informatica to be there to help our customers.
Amit, thank you for your time here on Bloomberg Technology. Your relationship with Salesforce, a deal, is something we've been talking about for about a year on this program. How did the deal actually come together? I mean, the thing that seems to have changed between now and several months ago, a year ago, is the share price.
Well, it's all about Gen AI. Look, they have been an investor in us through their ventures arm. They're a partner of ours. They're actually even a user of our products. We are a user of Salesforce products. So this relationship has been there for a long period of time. We know each other. We have thousands of joint customers. And we collectively seeing the world of Gen AI cannot really come to fruition with the foundation of good data. Our ETL, our governance, our metadata, our quality, our MDM, they saw that, they talked to customers, we talked to customers, and to me, it was the right time for us to come together to accelerate what you've been talking about, that the enterprises are still stuck taking Gen AI workloads to production, agentic workloads to production, and we can now help them with the help of their scale.
There's this roundabout that's happened, you know all about it, on-prem to cloud, and now a big AI-driven shift back to on-prem. Under the structure of this deal, can your customers, or your joint customers, still take the on-prem option, or is this going to be sort of a Salesforce cloud shift?
Well, look, see, the power of agentic comes in cloud. And our cloud technology with their cloud technology, we can run in any kind of the cloud, private cloud, hybrid cloud workload. So customers have all kinds of options with this architecture we have. We do not take the data and put it in the public LLMs. We have all of those ring fences. And we are working with enterprise customers. They have the comfort around it. We just came off our user conference where we launched our agents. We launched new versions of Claire, which is our Gen AI technology. And we see how excited customers are. We already have hundreds of customers using it in enterprise workloads.
Informatica CEO Amit Walia, thank you for your time here on Bloomberg Technology. We have a lot more coming up on the show. This is Bloomberg Technology. Apple is planning the most sweeping change yet to its operating system names, part of a software overhaul that extends to all of its devices. Sources say the next Apple operating systems will be identified by year rather than with a version number in an effort to bring consistency to its branding. Let's get out to Bloomberg's Dana Wollman. Okay, let's start again. Explain it to me.
Okay, so going forward, at least this year, all of the operating systems across Apple are going to have the number 26 attached to it. Now, that actually refers to the year 2026, next year, as opposed to each version of a software denoting the number, the generation that we're in on that version of the software, which gets confusing potentially for consumers after a while because Apple launched these different platforms at different points in its company history. So now it's taking an approach more similar to what vehicle makers do when they're launching new cars. In this case, settling on a year and choosing the next year as opposed to the current one, if that makes any sense.
So yay, WWDC brings an easier form factor for developers, but what they really want to see is how is generative AI being integrated into Apple? How are they progressing in terms of the overall form factor for the phone as well?
Absolutely. Both developers, consumers, and investors alike are going to be looking for substantive changes to these platforms, obviously not just a naming change. And so we are going to be looking for a handful of, in some cases, AI-related tweaks across the platforms. The most ambitious AI upgrades, for instance, a more conversational version of Siri, are still further out. One thing we have reported on here at Bloomberg is that all of these different platforms are going to be receiving a pretty meaningful facelift, a visual design change meant to make them look more cohesive across the different platforms. And this follows on the heels of Google announcing a pretty big facelift for Android, which is at least iOS's most obvious competitor in the market.
Dana Wollman, we thank you for bringing us the latest. Meanwhile, coming up, a conversation with Goldman Sachs Vice Chairman Robert Kaplan. That's live from the Goldman Sachs conference. You don't want to miss it. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets that still push higher. NASDAQ 100 helped lift by Nvidia results. They come in strong, 69% increase in revenue. There are headwinds from a macro perspective. Of course, the data on GDP looking weaker. And what of the tariffs, the reciprocal tariffs? But now let's get over to the Goldman Sachs conference in California. Shonali Basak standing by.
And welcome to our Bloomberg television and radio audiences. I'm Shonali Basak, and I'm standing by with Robert Kaplan. You might know him from his former time at the Dallas Fed. You might know him now as Goldman Sachs' vice chairman. In either direction, there's a lot to talk about in this market from your macro hat as well as your client-facing hat. But let's start with the latter. What are clients saying to you right now in the wake of what you saw just less than 24 hours ago with pressure on the Trump administration's tariff policy? Does it actually clear anything up for clients?
Probably not. I think most clients are just now reacting, and we're actually at Goldman piecing this through. And I think our own judgment is the administration's more likely to find other authorizations to continue to do what they're looking to do. It's still our best guess that when this is all said and done, the tariffs will settle out in the low to mid-teens. That'll create challenges for companies. They'll adjust to it. It'll create bigger challenges for small business who don't have the leverage to adjust.
So what's the key advice? What are businesses preparing to do for those tariffs?
Well, if you're a bigger company, you're reviewing all your logistics and supply chains. And the reason they're in the middle of doing this happened abruptly. And so given 6 or 12 months, most companies I talk to can reshift, but not overnight. It'll take 6 months to a year. And then the thing they're telling me is they're also, in light of this, they're gonna pressure suppliers. They're gonna take some out of margin. They'll put some in price. They don't know how much yet. And they're also looking how to tighten their belt a little bit, because they realize if they're taking some margin, they may need to find other ways to pay for it in their company.
So I was listening to your chief economist, Jan Hatzius, a little earlier. He reiterated that 35% probability of a recession, saying that's still quite material. It's an elevated level. What could make that worse? What are you most concerned about right now in terms of the economy slowing down?
So there's a couple of big structural issues that are probably reducing the probability of recession. Maybe very sluggish growth, but not a recession. First of all, we started the year thinking we were going to do deficit reduction. And the sense on the tax bill was it will be primarily extending the Trump tax cuts. It now appears that we haven't done as much cost cutting, and the tax package is more expansive, not done yet. So fiscal policy may be more expansionary or neutral, not contractionary. We've got labor force growth decelerating because of change in immigration policy. It means the labor force is tighter, means the probability of unemployment spiking up rather than just drifting up is less likely. You need to have a severe downturn. You normally would have a spike up in unemployment. And then the other thing going on is obviously tariffs, which have been well articulated. Those tend to slow growth and raise prices. But when you put all that together, I think we're going to have sluggish growth. Probably not a recession, but probably sluggish growth, at least for the remainder of this year.
With that worry about sluggish growth, as well as potential inflation on the heels of these tariffs, a lot of concerns about at least the dual mandate for the Fed, which direction the Fed goes in, if not stagflation outright. If you were still at the Fed, what would you do this year in terms of cuts?
So I've been counseling for the last number of months to be patient. You have a lot of uncertainty, you have big structural changes, let them unfold. The thing that would force the Fed's hand if you saw unemployment start to spike up, then the Fed might have to lean in more and take more risk. But that doesn't appear to be happening. And I think the tight labor force makes that less likely. So what they're waiting for is to see, and I'd be waiting for, how will these tariffs feed through the economy? We'll have a better sense of that through the summer and into the fall. And so I think you're going to see them take it one meeting at a time, be patient. There's an SEP, Summary of Economic Projections, they have to submit in June. If I were in my former seat, I would probably say 1 to 2 cuts, probably more likely 1. That's less than the market had been expecting. But I think you're going to see them take a patient, wait-and-see approach, and it's the right approach, I think.
The big frustration from our viewers here is that the market is pricing in 2 or less rate cuts. There is Morgan Stanley, which Mike Wilson believes could have 7 rate cuts by the end of next year. Now, our audience is really wondering whether there are no rate cuts this year. Is there a chance that the Fed does not have room to cut?
Possible. Yes. And the Fed, the thing is, I don't know, and then more importantly, the Fed doesn't know. And why don't they know? Because we haven't decided on what the tariff rates are going to be. We're still in the middle of negotiating a tax bill. I don't know what the tax bill is going to say. We have a lot of uncertainty. And so when you're in a period like this, sort of shorten up the prognostications, be more of a risk manager, take it one meeting at a time. And so I think that's what they'll do. And so there'll be people prognosticating out there. I would say the Fed's reaction function is going to be more a meeting at a time.
Now, how much control does the Fed really have when it comes to long end rates? You're looking at the bond market start to hiccup here and there. We have not seen alarming levels yet. We have not seen that 5% level on the 10-year that a lot of investors are looking out for. How big of a risk is there that we get there?
So the Fed doesn't have a lot of influence over the 10-year. Fed decides on the Fed funds rate. I actually think my focus, and I think to some extent our clients' focus, is more on the 10-year than on the Fed funds rate. And the reason is the deficit. Again, we went into this year with 6 and a fraction, close to 7% deficits. We've been outgrowing the world the last few years because of excess fiscal. I think people thought, okay, now we're going to reckon with this and we're going to start reducing these deficits, and it may not be materializing. And so I think you're seeing the back end inch up, maybe the term premium inch up, makes it harder to be a duration buyer. And I still think we're going to be wrestling with that for the rest of the year.
Robert Kaplan, of course, now Goldman Sachs vice chairman. You might have known him previously as president of the Dallas Fed, of course, weighing in here on these bond markets and what the Fed might do next. Back to you.
Bloomberg Sonali Bassett with Goldman Sachs Vice Chairman Rob Kaplan. Thank you. Let's talk a little bit about financial markets and the technology sector. Actually, a big focus in the here and now is that as it stands, Nvidia is once again the world's most valuable technology company, pipping Microsoft, which is a little bit higher. Apple is now flat. And of course, the big story on that is the reports about what we may get at WWDC next week. We're also tracking other earnings out there, other than just Nvidia. And one of the names that's really soaring, although it's a much smaller company by market cap, is C3 AI, up 25% off session highs. Interesting that basically there's a big focus on some of C3 AI's contracts in the public sector, as well as in its existing relationships with corporate America. But that stock moving, again, Caro, a smaller company, but one we've been talking about.
It is one we've been talking about. What else we've been talking about? The big breaking news, of course, in the last 24 hours, that a U.S. court has said not so fast on the reciprocal tariffs of the Trump administration. Now we understand that the Trump administration is asking the appeals court to pause this current tariff ruling. The U.S. says it may ask the Supreme Court on Friday to keep the tariffs intact. This is a fast-moving story. We'll keep you abreast of it. Meanwhile, coming up, Nvidia says AI demand will continue to soar. We'll have more on what that means for the chip design in the next. This is Bloomberg Technology.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Nvidia, once again, the most valuable company, overtaking Microsoft. Shares buoyant, off session highs, but trading at its highest level since January of this year. Other mega cap names also moving in the markets. Let's talk about AI demand and how investors are interpreting all of this. Bloomberg's Ryan Vlastelica at his desk, watching each stock tick by tick. I mean, that's the kind of main market story, right? Nvidia, and it's everyone's focus. But I do note some other moves in different directions for Mag 7 names. What are you looking at?
Hey, thanks for having me on. So I'd say Nvidia really is the key story of the day. I'd say the major takeaway that from what people I've spoken to and the research I've read is that results and outlook were both very positive, especially in the face of all the restrictions with respect to China. The fact that they were able to either get really close to expectations or surpass them, even with this kind of sales headwind, just speaks to the level of demand out there, the kind of consistent growth the company is delivering, and just in general, how important AI remains for other major tech companies that continue to invest billions and billions of dollars into it.
Bloomberg's Ryan Vlastelica. Thank you for the lowdown. Meanwhile, Nvidia and Mag 7 names, as we say, are ones that we've got to digest in the earnings, in the trade news. Let's bring in Daniel Morgan, Sonova Senior Portfolio Manager. And it's interesting, price targets gets raised on Nvidia across the board. We're seeing maybe the market thinking in the next 12 months will go at least 20% higher on the stock. Is this a buying moment, Dan?
Well, Caroline, obviously the report that we got was kind of messy, and I'm sure you've had many conversations about netting out the H20 numbers, and they looked really good. You know, Nvidia still has tremendous opportunity in front of it with the release of the new Blackwell chip. I didn't catch the dollar figure of revenues that they did on this upcoming first quarter, but on the fourth quarter 25, they did about $11 billion in revenues on that particular chip. So you look at that, you look at things they're doing in other areas like networking and data center, which they exceeded expectations on this recent quarter, and the move out into getting more sovereign governmental customers, like the relationship that they're getting involved with in Saudi Arabia. So they've got a lot of things going on beyond just this quarter. I still feel it's a very bright future for the company.
And what's notable, as they guided for their fiscal second quarter, is the idea that profit margins, also in the longer term, are going to be recovering to the mid 70% level, I think it was. What's also interesting is that they're firing on all cylinders when it comes to data center, when it comes to the Blackwell AI architecture. There are other parts of the business model, too, that are doing well.
Yeah. Data center was very good. It was up 73%. That's the AI chip space. Gaming, which what they were known as before, they got this huge presence in the GPU space in AI. They beat by over $1 billion on the quarter. Also networking, which we don't hear them talk about as much. If you ever, Caroline and Ed, sit in on the investor conferences, they'll talk about, well, something has to hold this AI chip in space in the data center. There's a rack. There's all these other equipment that they sell. And that was also exceeded expectations on the first quarter. So, areas beyond the data center, beyond what we keep focusing on, are also doing very well for them.
Daniel, when I spoke to Jensen Huang last night, he walked a very fine line. He praised President Trump for what he called innovative, revolutionary tariff policy, which onshores industry in this country. But he basically said policy is killing this company's access to China. Do you like hearing stuff like that from a CEO? Does it give you pause to go all in on a stock if the CEO uses the public forum to address politics that way?
Well, it's always dicey, right, when you're addressing President Trump and his policies. But, think about this. They were doing about 20% of their revenues out of China. And if they're not able to get another, diluted chip, let's say a new Blackwell chip that's diluted that the government will accept to selling in that market, then basically you're eliminating a huge potential of revenues for them, right? I think he's given some numbers like $50 billion AI chip market. And the thought process was that if Nvidia cannot take advantage of selling chips into that market and make money from it, then what's going to happen is there's going to be companies in China like Huawei who are developing AI chips that sell in that space. They're just going to make up for that lost demand. So it's kind of counterproductive, right, Ed? In terms of you want to be able to sell in the market, you don't want to give them chips they could potentially use against us in defense. But it's a fine line.
I think we should broaden out to the other Mag 7 names in the context of tariffs. Caroline brought us that breaking news that the administration may go to the Supreme Court as soon as Friday to challenge the U.S. Court of International Trade's judgment to block the White House current tariff initiative. In the context of Mag 7 names, how do you think this plays out?
Well, I mean, it's huge because just about all those companies are going to be impacted, especially Apple, right, in terms of their smartphones. You've got exposure from digital ad spend rates with companies like Amazon and Google. So it's really across the board. If you look at all the Mag 7, all the big tech stocks, pretty much everyone is being exposed to this various bans in various ways. So some more than others. Apple and Amazon obviously are heavily influenced by that. So, obviously if there could be a retrieve, bringing back some of those bans, that would be extremely helpful to clarify some of the uncertainty around those stocks.
It's interesting that Apple did manage to get back to that at $1.3 trillion level, Dan, on the optimism that maybe we will get a reprieve. But as it stands, how investable is it in the Mag 7 names at these valuations when we do have such lack of clarity?
It is tough, but I'm hopeful that we will get continued reprieve like we did with Apple, where we gave it, a certain, PCs and smartphones no longer applicable, but it's still a black cloud over the company. It is hard, Caroline and Ed, to put money in this group because you're not quite sure what the news headline is going to be the next day, how that's going to impact those particular stocks. I will say that the fundamentals long-term of those companies are still very bright. There really is no stock in that group that would question that. So, I still feel that going forward, it's still very positive in the Mag 7 tech stocks.
Just to clarify something very quick, Nvidia reported its fiscal first quarter earnings and gave an outlook for the fiscal second. But what Jensen told me was that Blackwell did make up the shortfall when you factor in the $8 billion lost revenue from China for that outlook figure. Daniel Morgan, Senior Portfolio Manager at Sunivest Trust. Thank you. Coming up, Elon Musk officially steps back from DOGE. We got more on that next, Caro, but we're looking at other names.
Yeah, let's just recheck in on Apple, because at one point it was back to the $3 trillion club. We're actually just sunk again. We're off by about 0.2%. Maybe, of course, on the latest headline that the Trump administration will be looking to the Supreme Court potentially as soon as Friday. They say it may take the Trump tariff case to the Supreme Court on Friday. Remember, of course, the US a particular court is looking on banning those tariffs, saying that they currently are illegal. This is Bloomberg Technology. Tesla, well, it's poised to begin its long-awaited robotaxi service in Austin on June 12th, according to a source. This is a milestone in Elon Musk's plan to reshape the company around driverless vehicles and artificial intelligence. Musk came out on X confirming some of this reporting, saying, quote, next month, first self-delivery from factory to customer. Ed, you were the guy that was reporting all on this, and I'm really interested as to why June 12th. There's a significance to the number?
Yeah, what I'm hearing is that this is a kind of live discussion inside of Tesla, that June 12th is the target. Elon Musk had previously said by the end of June, but it's a kind of soft launch, right? Early public access to driverless rides in a Model Y, not in the Cybercab. But it was interesting to see the after hours jump in the stock because, as you know, like we've had this on the show many times, when a date's given, people get more confidence because they're skeptical that it will happen.
And what's also giving confidence is the fact they've been testing.
Yeah, I mean, you think about the landscape, Waymo, Zoox, formerly Cruise, the cars that have already done this on public roads with no one in the driver's seat. What I learned is this week, Tesla has been driving around Austin, no one in the driver's seat, an engineer in a passenger seat. But it's kind of curious that Tesla's only just got to this point, and that's the part that Elon Musk confirmed overnight. Meanwhile, there's the politics. In Washington, Elon Musk is officially stepping back from his duties at the Department of Government Efficiency. Let's get out to Bloomberg's Mike Shepard. I mean, this is a kind of thing that you wait for because there's a term limit, but Musk talked about the reasoning why and what happens next.
Well, he did. And this, Ed, it's important to understand that this departure by Musk has been taking shape for a couple of weeks now. He really has receded from public view here in Washington. You'll remember at the beginning of the Trump administration, he was Mr. Ubiquitous. He was the first buddy. He was present at all these big events, the cabinet meetings, the sit-downs with foreign leaders, and even Trump family photos. But really, since last month, he has started to step back. And we began to see some differences emerge between him and the president and Trump's policies, in particular on tariffs and most recently yesterday on the big, beautiful bill. This is the tax package that is going through Congress. So this has taken shape, and Elon Musk is indicating that he wants to put more energy and time into Tesla. As you just described, they have a big agenda on autonomous vehicles and robotics as well, as we've talked about, and also SpaceX. The launch earlier this week, the test showed that they have a lot of work that they need to do there, Carol.
He faces lawsuits, but what does he leave in his wake as well, Mike?
Well, that's a great question, and we have some terrific reporting by our colleague Ted Mann this morning. If you haven't seen it, it's worth looking at what was left behind by DOGE, all these efforts that Musk spearheaded. Remember, DOGE was his brainchild during the Trump campaign. He came up with the idea of reducing the size of government in a drastic and move fast and break things way, and we see agencies reduced sharply across the board with little course for them to return to power.
Bloomberg's Mike Shepard, we thank you so much. Meanwhile, that does it for this edition of Bloomberg Technology. Don't forget to check out the podcast. You can find it on the terminal as well as on Apple, Spotify, and iHeart, Ed.
Yep, what a week it's been so far. A lot more to come from San Francisco and New York City. This is Bloomberg Technology.